Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday, January 28th. This will be our chart lesson for today. And really, we just had another trading range day. Um, the highs ended up being mostly around 1498, and your low, really, I think your low part was 1494. This overshoot right here where we broke below, that's a great setup to go long. And really, what set this move up was the news this morning. Um, We had some bad news, especially this big move down right here. That was when the housing reports came out, and it was pretty much a disaster. I don't pay any attention to what the real numbers are. I just look to see what they are. If I even look at them, I just look to see what they are compared to what they were, suggesting or thinking that they were going to be, expecting they were going to be, so to speak. So But generally, I don't care what the numbers are. All I care is the reaction from it. And we never know what the reaction is going to be. And so, if you're not already in a trade, you definitely probably want to get out of one right before the news comes out, because the news could have come out right here and it could have shot up this way just as easily as we shot down this way. And we never know what it's going to do. So once it starts moving, if you can get a piece of it, that's great. But I don't like trying to do that. I like to try to if you're following the trend, you're probably on the right side of the trade. And the trend was down when that news came out. So if you're still short, look what happens, Um, so the price action still works. It just moves a whole lot quicker. This all happened pretty quick. And if you haven't heard me say this before, and you may not have if you're new to watching our videos, but generally, any kind of news move will recover. The prices will take that news move back rather quickly. And if prices are going to continue on with the trend like down, they'll still take that move back and then continue trending down again. It's like a reset. The market almost always resets. And today all it did was reset and go back in the range. And that's not untypical. And you can see that pretty easily that we had a double bottom here. We broke below it, but when we got back in that range, it continued to hold. And this was kind of the high after the regular open this morning right in here. And these were really about where the highs were from Friday as well. And so that continued to hold prices. And generally what I just look for where you get the most touches. And, I had this up here to begin with. And then when we made this high right here, I just moved it down, and that turned out to be where you got it mostly before. And really the way I found this one was because um, this was your last high in this, in the down move. This was really where the trading range highs were. And really, again, all I do is look for where you get the most touches. And that could have been up here, it could have been up here, but it turns out to be right across here. And I usually like to look at the closes too a lot of times. Sometimes it'll be the highs, and that's probably it right there. But sometimes it'll be the closes. The closes are important, so but you just find where you get the most touches, and that does look like it's right there. So that seems to be the spot. And if you drag that across there, that's the closes from um, Friday afternoon for the most part. So um, that turns out to be, these areas become important for a reason. And a lot of times it takes prices a good while to work through them. And we may break above it and come back several times and then break below it and come back several times. But right now, 1496.50 just kind of seems to be an equilibrium point. We're constantly fighting to get to that point. And you can see that's about where we closed today. So pay attention to that level until it's not important anymore. But let's talk about the trades. You should have been able to get this trend line right here. I started off with mine right there, and that looks like I'm pretty confident that's it. And the way I got that was I drew it through the first two lines I could touch. There's your first swing, and there's where you got the next touch. So I drew it off through that one and touched that one. And sometimes you'll draw it off of one and through the next. But generally you want to figure out where you get the most touches, just like this line here. And that's where I was getting the most touches. And then when we came up here and closed below it, that close right there is really telling. We ticked up there and closed above, couldn't close above it and closed back right on that line. So that tells you that line's got importance. There really was not a good setup until this bar right here, and it's so low down here, the lows, I was hesitant to take it, but if you took it, you know, you had to ride this out a little bit. You just have to keep your stop above that. But this was the better place to enter below this bar, and that's just a breakout pullback short, and that's another test of that trend line. And to me, that's the better place to enter because it's a breakout pullback short, and prices moved on down pretty quickly. But if you entered below this bar, and generally I get this question a lot, is how do I know when to enter? And generally what you're looking for is when you get to a strong support or resistance, you're looking for the right kind of bar, and the bar is like a reversal bar. This is a reversal bar. It opens way up here and trades higher and then turns down and closes on its low. That's what a reversal bar looks like. There's one right there. Here's one on the low side. Nice reversal bar. There's one right there. That one's awfully big. You know, you got to be careful entering below these big ones. Sometimes that's dangerous. There's another one right there. But that's the kind of bar. There's one right there. You want a reversal type bar generally, and that's a smaller one, but that's one right there. And so that's what you're kind of looking for. You don't want to enter short below a big bullish bar like this, and a lot of times not even a doji, especially if it's a bigger doji like that, because that's just a one bar trading range, and you know what happens in trading ranges, prices usually break out and snap back. And just like right here, there's your little, this turned out to be a trading range, and prices, even though prices didn't break lower, that's like when you get that close and it comes back and doesn't go as high and then turns back down, that's just close enough to be a breakout pullback, and it'll generally act like one too. So generally if a pattern looks like it's going to, if it's close enough to get confused or look like a pattern, it's usually pretty good. Sorry, I got interrupted there, but yeah. So what you're looking for is you're looking for a nice reversal bar. You're not wanting to go short below a bar like this or long above a bar like this unless you've got a trap. Now, you know, I don't want to get you confused by talking about too many things at one time, but, you know, in the case of a trap, you know, it really doesn't matter. Like right here, there's a trap right here, and I'll talk about that when we get there in a minute. Generally on a trap, you don't care what the bar looks like as much. If you get the right kind of bar, it just makes it even a better trade. But when you get a trap, you got to go with what you got, because that's the whole idea behind a trap, is it fools people into thinking it's a different type pattern, and they get fooled and they get trapped on the wrong side of the market. But anyway, this was your first short. It's another pullback off. It's a breakout pullback short, but it's really a second entry short as well. And you know, this ran down really quickly. I screwed up and exited right in here at this level right here, so I didn't get all this. I wish I'd have held on. But generally when you go into that overlap like that and you're that far away from the EMA, it's going to bounce, and I didn't want to give all my money back. So so I exited. I gave up a couple of points, but you can't worry about that. You just have to say, okay, sometimes you'll get it right. If you follow the rules, which most of the time if you exit there, you're going to exit perfectly, and then you get another entry. This is one of those times where I exited early, but I guarantee you what it'll do to most people is next time it'll get you to hold on, it'll bounce back, and you'll get back all your money. So don't question it. Just go with what normally, you know, we know what the biases are. We know what happens more times than not. And if you play the odds, you're going to be on the right side. And sometimes, you know, playing the odds, you'll be wrong. But I guarantee you, if you play the odds, you'll be right more times than not. And that's what allows us to make money. And that's what allows us to be profitable traders. So don't question it. Just take it and go with it. But there was a great chance for a reversal here. Anytime you break below an important support area like that, when you finally get the reversal and you get this far away and it's been that far since you've touched, I mean, you got to, and that's a perfect reversal bar. So I actually entered this right here on a limit order. So I had to watch this go against me a little bit, but it turned and bounced really quickly. And then you were able to ride this all the way back to the other side, depending on how you played it. And but this was a great setup, and I actually added on above this bar, so I got a better entry on my second entry than I did my first one. I got a tick better, and so I was able to load up on this trade and ride it back. And this single trade here made me most of my money for today. Your next really good entry was right here. This one was really tempting to go short right here because that's a nice reversal bar, but look at all this overlap. 1, 2, 3, 4 bars overlap. These two are side by side. This one's a doji. That's pretty much a doji, and you see what happened. It broke lower and snapped back. It went up and broke out the high side and snapped back, but then notice when it bounced off that previous support, and look how those closes are inside that previous area. That's a tail. It's telling you something. And then notice this was a second entry short, and this was really, you might have gone short right here, and I'll be honest with you, I went short right here, but as soon as that ended as a doji, I got out of this trade, and I think I made one. I might have made 2 ticks on this, but I think I just made 1 tick, and it never would have gotten its 5 ticks. But when that nice bearish bar on a double top, when you're looking for a possible retest, I mean, it's hard to ignore that entry right there. And I'll be honest with you, I got tricked right there, and if you got tricked, once you know, your best trades are going to take off like that right there, or like this one right here. When it ends in a doji like that, it doesn't always mean it's going to reverse, but there's something, you know, it didn't take off like it was expected. So that indicated to me, hey, they're still buying this thing. I better be careful. This is probably a trading range after all. And we're probably going to take the rest of this news move back because there was some other news up here in the morning. And sure enough, that thing reversed. And so now you go long there. And the reason you go long here, even though that's a doji, is that you got a failed second entry short off a double top when everybody's thinking short, because that's your first break of the trend line. And so you got a lot of trap traders, and look how that thing exploded up there. And that's what causes that to explode up. It starts hitting those stops. And it was a little bit scary when it broke up right here and then closed back down here. But notice that as soon as it touched that EMA again, and these bars happened really fast, and when it closed on its high here, that's a really good sign. And so, you know, you were able to ride this up until you got the overlap again right up here where there's previous resistance. So you can exit there. There was not really a good short setup here. You might have considered going short below this bar right here because of that little double top, but it's usually best to watch to see a double test and get a second entry, and that is a form of a second entry right there. But what I did was wait for a true second entry on this particular chart, rather than looking at a smaller second entry on a smaller chart, and that came right here. So I entered right here. And again, it ended as a doji, so I got a little nervous, but since this was such a small bar, I just put my stop above it and held on and rode it all the way back down to the bottom. And again, I exited right here where the support is, right where you would want to exit, and that turned out to be a great trade. And it immediately bounced and went up. And notice, let me show you this. There's 2 equal legs here. This is always a nice tail. There's leg 1. And there's leg 2, a perfect 2-legged move back down to the low side, and then it bounces. Look at that nice bullish bar, open down here, closed up here. Great place to go long, and back up to the top again. And again, you just exit right up here in the same place. Usually I'll get out a tick or so in front, and this is a range day, and there's your, you know, a new high in the range day. You usually always fade that. So you didn't want to fade it here, though, because it wasn't a very good bar. And this bar is so big, you got to get in back here. So I dropped a limit order halfway through this bar, but you got another chance to enter here if you wanted, and you got just enough to, you know, get your 5 ticks and get out of that trade. And then it kind of got hung up, and, you know, it's really late in the day here, and then you got hung up in this afternoon, but it's making, notice how it's making higher highs all the way up through here, and or higher lows, I'm sorry. And then you made a higher high here, even though this was not a higher high. So it wouldn't surprise me if we don't go higher from here. We'll just have to see, because this is more rangy than it is trending. And you can see how flat. Notice, you know, even though the EMA's coming up here, but it's going down there, it's coming up here, and you can see how flat that is. You don't want to be entering when it's that flat. And this whole thing really from this point on is flat here, and just not a good. I mean, look at the EMA here. There's no doubt it's trending down, and then even right in here, it's it's trending up, and this is where it kind of flattens out right in here. And when it looks like that, and here it is, it looks like that right over here. Look how flat that is, and look at those bars. Stay out of that stuff because it's just trouble. And you can see all the way across there, and all it did was when it got so far to the other side, it just snaps back, and that's what'll happen. And so that's the only way to trade this is to buy the lows and sell the highs of the range. And for some people that's hard. And what I've really noticed is once they finally figure it out and get pretty good at it, because it'll do this for several days in a row, then they get locked in on looking for a range every day, and then it'll trend and they'll get blown out of the water because they're buying every low and they're counter trend trading, or they're selling every high counter trend trading, and they're on the wrong side of the market. So don't get locked into this. Don't get tunnel vision. That's the key, is just knowing where the price action is doing and following it. So it takes a while to get good at it, but you'll get good at it. And so that was it. There were 6 decent setups today. And again, like always, there's other setups here, but these are the good ones that are based off of our rules that really work well. And those are the ones that, I mark. Doesn't mean that there's not other setups here. It's just the others are not very good setups, or they don't fit our rule to some degree, and we try to avoid them because they're, we only want to take high probability trades where the odds are on our side. And that's the reason I mark the trades I mark. And if I don't mark one for some reason, it doesn't mean, because I'll almost ultimately every day I'll get an email, what about so-and-so? What about so-and-so? Well, if I didn't mark it or didn't talk about it, there's a reason. Some reason it doesn't fit our rules, and you're welcome to ask me why. I don't mind answering that, but what I'd hope is that you try to figure it out on your own, because that's how you learn. And so see if you can figure it out on your own, and if it doesn't make sense, by all means, drop me an email. I'm happy to answer it. But anyway, that's the trades for today. I'm probably going to wrap it up. I'm going to run something else by you. I haven't decided what I'm going to do yet, but most of you that have been around for a while, you know my story about trading, and you know that my whole reason for going to trading was to get out of corporate America, to get out of the rat race, to make my own schedule. But I like the teaching part, and I like it, and I don't want to get out of it, but it's starting to consume me. And I'm starting to be, I'm sitting in this office from whenever I start trading to 5 or 6 every day. And that goes against everything, the reasons I wanted to be a trader and the reason I did this. And I don't want to give up the teaching, because I like it and I like helping people. And I want, the main thing I like about it is I want people to hear the real story about trading instead of all this BS stuff. I'm just going to give you the real story, the way I see it, and the way, my personal opinion, and there's no fluff in it. And, I just like to be straightforward with people, because I wish I'd have had somebody to be like that with me when I first started trading. So, but anyway, where I'm going with this, to make a long story short, is that I want to be in and out of here by noon, 1 o'clock at the latest every day. So I'm seriously considering starting trading somewhere around 7 to 7:30 every morning, maybe even 6:30, and wrapping this thing up and doing my chart lesson and being out of here by 1 o'clock, especially when the summer gets here, when I can still play golf in the afternoons and enjoy time with my kids and my family. And because that's why I did this, or that's why I became a trader, to do that kind of stuff. And I'm finding that, I'm a workaholic. I really am. And I'm trying not to be. But I'll still do the chart lessons. I don't want you to think that I'm going to get out of teaching, or that I'm going to stop doing these, because I like doing it, and it really helps my trading too. But I may just change it around. I may start trading earlier and getting out of here a little bit earlier, so that the chart lessons may be done earlier every day. And you may not get anything past whatever happens at 1 o'clock. I've either thought about doing that, or maybe doing it a day behind. And like today, I would be doing Friday's lesson. So there's a couple of different ways. If you got any suggestions on that, what you'd rather see, whether you'd rather see it each day, which I think most of you probably would, or if you think seeing the whole day, a day behind, works better, I'm open to suggestions. But these are just things I'm kicking around, And it may, you know, I may wait till the spring to start doing this when the weather starts to get better and the days get longer. But it's just something I'm kicking around because I'm finding that I'm getting right back into my old habits, and I'm breaking some promises that I made to my family and so forth. And I can't help it. It's just the way I am. I'm a workaholic, and if I like it, and I'm just consumed, I'm starting to get consumed by trading, and I don't want to do that. It's something I don't want to fall into. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. Hope you had a great trading day, and if not, a better one tomorrow. And make sure you study your charts. Make sure you look at your trades, because that's the key is trading experience and just learning on the simulator. I'll clarify that. Don't be practicing and learning with your real money. I don't care how good you think you are. You're going to give your money away if you're not a profitable trader already. So don't make that mistake. Get on the simulator. Don't question it. Just take the trades every day based on the rules and study it and practice, and you'll get better. I promise you. Some of you will do it faster than others, and it probably won't happen for overnight for many of you. So, but if you want to do this and you stick to it long enough, it can be done. So, but I'm going to wrap it up. This is Mac. We'll see you next time.